Hi everyone, and a very warm welcome to the day two of the Master for June webinar series by Being ACCA. We met yesterday. Now here I am again today to help you people with the day two of this webinar. The agenda I had already discussed with you people yesterday. All 3 days of agenda I have mentioned to you people. So today we are going to continue and we will be sticking towards the agenda for the day two of the webinar series. So just a quick thing, if you people want to note down my number, this is the place where you can contact me even if you want to reach out to me after the webinar, or alternatively, you can also scan this QR code. And if you do that, you will directly be taken to WhatsApp message me. All right. So again, just a quick reminder about our agenda. Yesterday, day one, we had covered the basics about the PM paper, the format, the syllabus structure, and everything. We revised CVP analysis concepts, and then we moved along to decision-making revision. We practiced a pricing question together, a section C question, which was something that we had solved together in yesterday's session. Now today, day two, our agenda is to cover about the performance measurement and the control revision. That's one of the areas which a lot of students get bothered by. So we will cover that area, and then further, we are also going to have a discussion on one of the section B questions. Before that, we will revise the area upon the cost and accounting techniques. So absorption costing, marginal costing, and ABC costing. So we'll revise all of these concepts first quickly, and then we will head to again yet another past paper practice. So this is what will be the agenda for today. I'll also let you people know what are some of the tips that you can follow while you are answering questions from different sections in the paper, section A, B, and C. And then lastly, day three, this will be only for the enrolled students at Being ACCA. They are going to get the access to the grand revision, the entire syllabus that we are going to revise in one shot. This will be included for all of the students who have enrolled for the success batch. Okay, guys. So now we move forward towards, I had discussed with you people about the revision batch also that we offer at Being ACCA. Both the success batch students as well as the revision batch students will be getting the access to this. In case you're a test series students and you still wish to attend the day three session also, you can reach out to me and I'll help you with the process for that. If you are not an enrolled student at Being ACCA, you can still be there as part of the revision batch. It is going to consist of the entire syllabus revision. We will be covering 6 of unit-wise tests that I will personally evaluate for you people. 2 mock evaluations. We keep meeting live for the practice sessions, and then the past paper question recordings will be made available along with my WhatsApp support. All of this is priced at $65, and this is inclusive for all of the features that I've mentioned over here. And you can also use the coupon code BEINGACCA10 for a flat 10% off. That said, guys, now are we ready to get started with the revision of today's topic? We are revising performance measurement. Yes, all ready? Shall we get started? Okay, so just a moment, a student has messaged for the link. Okay, so we are now going to revise the performance measurement unit. Now, guys, all of the success batch students, we had our live session right in the morning today. So in the morning, we have revised this syllabus area as well. So it will be another revision for you people. So enjoy this revision again. Now, this is performance measurement. So here we are basically seeing that the different departments that we have in a company or overall company as a whole, how the performance has been. So how can we find out whether the performance has been good, whether the performance has been bad? So we can use a variety of indicators. The very first one, financial indicators, which you people have learned from the end of time. You've learned it from such a long period of time, the different ratios that you cover, not just part of the PM paper, but but also your FM paper, FR paper, and the audit paper. So financial indicators, these are just the ratio analysis that we have learned. Different categories of ratios are there. You can look at the profitability ratios, you can look at the liquidity ratios, as well as the gearing ratios. And then guys, if you talk about today's competitive environment, what do you people think? If a company only cares about their financial numbers, will that be sufficient in today's world? Only looking at financial numbers, not caring about what customers think, not caring about what the government thinks, what the other people think. Will it be possible to survive today? No, it will not be. So that's the reason why we need to consider something beyond the numbers also. So we look at different techniques. Balanced scorecard is one which we have learned. What is balanced scorecard? It teaches you to look at a company's performance in a balanced manner, not just looking at the numbers, but also looking at other different perspectives. What are the 4 perspectives we've studied as part of balanced scorecard? Can we have a quick recap? I want the names of the 4 perspectives that we have as part of the balanced scorecard. Come on, guys.
Promote internal business process, financial perspective, and learning and growth.
Yes, absolutely. 4 perspectives: learning and growth, customer, and then you have your internal business process, and then the learning and innovation. Yes, absolutely. So these are the 4 perspectives that we have covered as part of the balanced scorecard. Now, if you want to evaluate the performance of one company, these are the 4 perspectives that we look at. Then guys, we also, if we delve deeper into the financial indicators, like I was telling you, we have different classifications: profitability, liquidity, gearing. So within profitability, what are the different ratios that we've learned? We've learned about return on equity. This measures how much the equity shareholders have gained. ROCE looks on entire capital employed, and then you see how, upon the money that you had invested into the company, how much return have you been able to generate. Same is for your gross profit margin. It helps you find out that after reducing all of the direct costs of the company, how much the company is able to earn. Then the net profit margin, you subtract all possible expenses, and then you see after all possible expenses, how much have the shareholders earned. So these are the different profitability ratios. What do you people say? Higher these numbers, or the better it is, or lower these numbers, the better it will be? We're talking about return. We're talking about profits. So higher the better, lower the better.
Higher the better.
Higher the number, better it will be. Absolutely. Then you have the asset turnover ratio also. It helps you calculate that upon the assets that you're using in the company, how much of sales are you able to generate using those assets. Then another classification that we've studied is about the liquidity ratios. What do liquidity ratios measure?
Current ratio, quick ratio.
Yes, we have 2 ratios: current ratio and the quick ratio. These are the components. But what do these ratios measure, guys? What do liquidity ratios tell you about a company? Anyone? What do liquidity ratios tell you? Very simple terms. You people have been learning ratios for a very long time. Absolutely right, Annette. They tell you about the financial ability of the company. So in the short term, whatever liabilities the company has to pay, do they have enough money to pay for those liabilities or not? Now, within this, we've studied 2 ratios: current ratio and the quick ratio. What about the current ratio? What is the ideal ratio that we have? Ideally, what should be the current ratio for a company?
1:1.
What should be the current ratio? Quickly, guys, this is something which is very basic. This should be on your tips. Yes, 2:1 is the ideal current ratio, right? And then if you talk about your quick ratio, what is your ideal quick ratio?
1:1.
That is 1:1. Yes, absolutely. Then we have the third category that we are discussing. That's the gearing ratios. What do we mean by gearing in a company, guys? What's gearing the synonym of? Okay. Debt, yes. Gearing is everything related to debt. So whether the company has debt in the company or not, then we say if there is debt, then we call that company as a geared company. So in a geared company, definitely when you are taking more and more of debt, the financial risk of a company increases. So what do you people say? If a company has a very high gearing ratio, what do you know about the company? Is it safe or is it risky? That company is risky. Absolutely, guys. So these are the financial numbers. Now, talking about if we want to look at the quality perspective, non-financial indicators, then we have something called as critical success factors and the KPIs. A lot of the students, before I explain this, I would like to ask you people, can I say that CSFs are the same as KPIs? Will I be right if I say so? Critical success factors are the same as KPIs. Can you people help me? Am I saying correct? No, absolutely. You people are correct. These are two different things. What is the main difference? Let's first understand what the concept is, then we will discuss what is the difference. First of all, if we talk about the critical success factors, CSF, critical success factor, if you do not want any pressure on your mind, just always remember this very simple example. What is that example? Imagine you are going to a restaurant. What is that one thing? If that one thing is bad at the restaurant, you're going to immediately walk out. What will be that one thing? You're going to a restaurant, and if that one thing is bad, you will walk out immediately. The taste of the food, the quality of the food. If any out of these things are bad, you will not think twice. You will walk out from the restaurant. Taste, quality, hygiene. Yes, absolutely. So if you are, imagine yourself in the position of the owner of the restaurant. So what do you have to do so that you can survive in the long term? You can do good business. You have to ensure that you are doing well in taste, quality, and the hygiene of the food. If you are not doing this properly, you will not be able to continue running your restaurant. So this is the easiest way to remember the meaning of a critical success factor. What is a critical success factor? Something which a company has to do perfectly, something which the company has to do really well if they want to succeed. If you don't want to succeed, don't take care of the quality of the food. But if you really want to succeed as a restaurant, you absolutely have to take care about the food's taste, quality, hygiene, etc. That is something which the people are coming to you for. And if you're not able to give that, they will not come back to you. So this is what is a critical success factor. It is what is important for the company to succeed. Then if you talk about the KPIs, now I have said, okay, I want to achieve good quality of the food, good taste of the food. Now, what do you people say? Having a good quality. Can I really, is it very easy to measure the quality? Is it very easy to measure the quality? What food I might find tasty, is it necessary that you people will also find that food tasty? Does everyone have the same preferences, opinions? No. So maybe I like something, but that same thing is something which you don't really like. So this is subjectivity. Absolutely right, Shilpa. With quality, the problem is that it is heavily subjective. So what do we need? If I want to see whether I'm able to achieve my CSF or not, whether my food is good quality, good taste or not, then I have to use something to measure whether I'm able to achieve my objective or not. So what do I use to measure? I use the KPIs to measure whether my success factors are being achieved or not. So if, for example, guys, I want to measure that at a restaurant, how I want to measure if my food is of good quality or not. So what do you people suggest? What can I possibly do to measure that? If the quality of the food is good, if the taste of the food is good, what can we do to measure this?
Get survey from customers.
Absolutely. Take reviews from the customers, go around the tables, ask the customers what they think about the food, what they think about the quality. Usually, you people will notice this. If you go to a restaurant, I think just yesterday or day before yesterday, I went to a new restaurant for having food. So, because they were new, they just want to know whether the customers are liking things or not. So, they came personally to the table and then they asked whether the food and the taste was something which we enjoyed or not. So, this is how collectively collecting the reviews, the ratings, the feedbacks from the customers will help them measure whether they are able to achieve the objective or not. But then again, how do we measure quality? What do I say? I like the food. How much? So usually we come up with the ratings for this. So out of 5, we have to give the rating. If 5 is the best, 1 is the worst, how much rating would I like to give to the restaurant? So maybe the company can set a target that out of 5, we want to have at least an average rating of 4 stars or 4 points out of 5 points. So this could be the way that they are measuring quality. Definitely, because quality measurement is very difficult. So it's important that we try to put it in a number format so that we can measure it, so that we can keep a track of it. And if there are any problems, then immediately the action can be taken to correct on those things. So these, my friends, are the concepts of critical success factors and the key performance indicators. Are you all now crystal clear upon both of these concepts? Yes, you people now understand what is CSF and what is KPI? Would anyone like to quickly summarize the difference? Now, you people would surely agree. You people were telling me this before also, that they are not the same thing. I agree with you people, they are not the same thing. Can you tell me what exactly is the difference between CSF and KPI? Why can I not say that they are both the same things? Let's see how much you people have understood. What is the one line difference between the CSFs and the KPIs?
CSF is something where the performance of the organization or the company has to be the best in order to maintain its quality. KPI is like whether the critical factor which we have derived is being achieved or not.
Right, absolutely right, Tilaga. I can see some other responses also in the chat box. Shruti says KPI are quantifiable evidence which will help you measure whether the CSF has been achieved or not. KPI is the measurement tool. Absolutely correct. Absolutely right. Adam says CSF is what must be done and KPI is what you use to measure CSF. Absolutely bang on, Adam. Shilpa says CSF is the area where the company has to perform extremely well and KPI is what you use to measure it. So people are absolutely right. This in fact is the main difference between a CSF and a KPI. So with CSF, I set my target that, okay, I want to do this. This is what I want to do if I want to succeed. And then KPI is what I use to measure whether I'm able to achieve that thing or not. Very easy. Right, now we proceed further towards the balanced scorecard. Again, you people were previously naming these 4 perspectives for me: the financial perspective, customer perspective, internal perspective, and then the innovation and learning. So like the names themselves are telling you, what exactly do we measure in these perspectives? Firstly, the financial perspectives measure, as the name itself is telling you, it measures everything related to money. So who cares about the money? The shareholders care about the money. So whether value was created for the shareholders or not, that is what we measure using the financial perspective. So we use things like ROCE, things like profit margin, return on equity, all of these things, growth in the share prices, how much dividends the shareholders are getting. All of this is used to look at the financial perspective of the company. Then guys, the next perspective is about the customers. So this is, like the name itself is telling you, everything related to what my customers think about me. So how can I measure whether my customers are satisfied or not? You can see some examples I have put. The number of people who are repeat customers. If one customer came to me, did that customer come back to me one more time because he liked my product so much? So usually if you talk about your shampoos, your face wash, if it is something that you are satisfied with, the next time when that shampoo bottle gets over, you buy that same shampoo. So this is what repeat customers means. If you are buying the same shampoo, that means you like that shampoo, you are satisfied with it, then only you are coming back again. And then the percentage of customer complaints can also tell you how satisfied the customers are. If the complaint rates are very high, then you know that the customers are not very satisfied and we need to do something to improve in this area. Then you have the internal perspective. Like again, the name is telling you, this is everything that is happening internally at the company, the way the company functions, the way processes are happening at a company. So anytime, let's suppose in my factory, there are 20 machines and most of the time 10 machines are not working properly. So there's a downtime that I have to face. What do you people say? Facing a lot of downtime in a factory, is it a good thing? No, this is a bad thing. Absolutely. So we have to do something in this perspective. Then another thing about my internal process is how satisfied my labor is working at the company. What do you people say? If the labor is not satisfied at a company, will that mean good thing or a bad thing for the company? Labor is not very satisfied. So this will be bad. Why? Because if the labor is not satisfied, they will try to work at other companies, maybe because they are not happy with the work that they are doing at your company. So the labor turnover can also affect your operations. If the experienced employees keep on leaving the company, you have to incur a lot of cost to replace those employees. You have to do hiring again. And then even if the new employees are coming in, you have to still provide them with the training because they are new. They need to learn how things work at the company. Your skilled employees, your experienced employees already knew that, but now you have brought in new people. So you have to teach them from the scratch. So this is again about your internal processes, how efficiently the things are working internally at your company. Then last but not the least, we also have the innovation and the learning perspective. So like again, the name itself is telling you, innovation is all about doing something new, coming up with new ideas, something which the business was not yet doing. So developing itself for the future. So you people will see Google being a technology company, a software based company. You people see how Google is spending so much amount of money to come up with their AI softwares. ChatGPT was the first one which went viral among the common people. So you saw now how Google, Microsoft, all of them are coming up with their own AI related models. So how do you measure whether the business is doing well over here or not? You have a look at how much time the staff has spent on training, how much of your revenue has now come up from the new products. So people see, do you guys know the name of the AI that's been released by Google? I'm sure you people would know that. What's the name of the AI that Google has released recently? You people should know these things. Yes, that's Gemini. Absolutely. And do you also know what's the AI tool released by Microsoft? Yes, Microsoft has come up with Copilot. Absolutely, guys. So now you people see that their free versions are also available, but if you want to do a complex usage, if you want top-notch answers, then they ask you to subscribe to it. So if they want to measure their innovation and learning perspective at Apple, at Microsoft, at Google, what will they do? They will see how much of the percentage of the revenue came from new products. So if that percentage is increasing, that means your organization is doing a good job at innovation. So these are the 4 different perspectives that are covered under the balanced scorecard. Are you all with me till here? Yes, do you all follow? Okay, great. So now we move forward to a question practice. We are going to do a section C type of a question since a lot of you are bothered by 20 marker questions wherein not a lot of marks are available for the numbers. So here I will solve a question together with you people. So first, before we move forward, just a quick reminder of the tips for the section C related questions. Firstly, you people have to read the requirement first. Whenever you open a section C question, your first step always is going to be to read the requirement, highlighting what exactly you have to solve. Then what you will do is, after you know what the requirements are, what the examiner wants you to do, then you are going to dive into the case case study. In the case study, you will simultaneously, while you are reading the case study, you will keep highlighting any important information which you might use in your answer. Then all of your answers have to be as per the marks that are available. Ensure that for a good answer, if let's suppose the requirement carries a good amount of marks, 8 marks, 10 marks, you are answering in enough depth to be able to secure those 8 to 10 marks. Always use subheadings. Do not give very lengthy answers. Do not write long essays. Always and always you should be using short and focused paragraphs rather than writing the essays. And wherever it is possible, you people should also use the spreadsheet function. Do not do your numbers on your calculator and then enter that into the spreadsheet, because this way the examiner will not be able to see your workings, and even if your some of the steps are done correctly, you will not be able to get the marks using the own figure rule because you never showed your workings to your examiner. Then guys, we also have something about the time management. I told you people in the day one of the session also, if you are a champion at PM concepts, but if you mess up with time management in your paper, you can still end up failing the paper very badly. So please ensure throughout your entire paper, you're taking very good care of your time management. So for 20 marks that we have in one section C question, multiply that with 1.8 and you're going to get 36 minutes that you have to be able to solve a section C question. We have to strictly stick to this time management requirement. If we don't, then we can mess up the paper, we can mess up on the other requirements. So these are some of the things I want you people to remember while you are at a section C question. Are you all with me till here? Are we now ready for a question practice? Okay, so allow me a moment while I switch my screen. Can you people let me know if you can now see the kit being presented on the screen? Okay, great. So this is the question that we are going to practice together. You can see the name of the question is Flag Company, and you also can see right beside it, it's written that this was a past paper question. It was tested in September, December of 2021. So this makes it quite a recent past paper. And like I have been telling you people, here as well, you will see this pattern that for the entire 20 marks that are available in this particular requirement, you people can see. If you read the requirements, you will notice that all of them are discussion related requirements. None of them involve a lot of marks that will be available for your numerical calculations. So like I told you people, the first step that we will do, we will read the requirements first. So you can see 20 marks have been split into two parts, part A which is worth 14 marks and then part B which is worth 6 marks. So what exactly does the part A want you to do? You have to analyze the financial performance of the two airlines, including reasons for the differences in the two businesses performance. So you have to analyze the financial performance, that's the first thing. And while you are doing that, you also have to explain the difference that's there in their performance. So maybe whenever you're comparing two things, one thing might be better than the other. So you have to also give proper reasoning why the other thing is better than the first thing. So this is what we are supposed to do for 14 marks. And also a note has been given to us by the examiner that I have to use the headings of profitability, liquidity, and risk to structure my answer. And you can also see a very cute thing written over here. 6 marks are available for the calculations. So total question is worth 20 marks. How many marks do you need to score in this paper individually to clear this? To clear the paper, how many marks do I need to score individually in this question? Minimum, bare minimum. At least 10 marks will be needed out of 20. 50% is the passing mark in ACCA. What do you people say? If I get all the numericals 100% bang on, will I be able to pass this paper? even if my numerical calculations are 100% accurate, solely on the basis of numbers, can I pass this question? No, I cannot. Why? Because only 6 marks are available, but I need 10 complete marks to clear the paper. So what do I have to do? This requirement, this question, when you read this, it should be straight away getting into your head that if you only focus on numbers, nobody can stop you from failing the paper. If you want to clear the paper, numbers as well as discussion, both of the things are equally important. And in some questions, like the one that you're seeing over here, sometimes the discussion part will be even more important than the numerical portion. So we know that 6 marks are available for the calculations. That means if you take away the difference, 14 minus 6, that means 8 marks are available for your evaluation of the financial performance. So till the time you're not giving the examiner proper reasons why the performance is the way that it is, you will not be able to score these 8 marks. Then this is the part A of the requirement. Then the part B wants you to briefly explain how the Fitzgerald and Moon's building block model could be used to manage the performance of a service business. So this is a requirement worth 6 marks. What do you people say? Does the part B of the question require a case study based answer, or is it going to be a generic answer? What do you people say? Will this be case study or will this be generic? I can see a mix in responses. So that means you people are not clear with the rule that we are supposed to use to judge this particular thing. I'll tell you people what the rule is. The rule is if your requirement specifically states the name of the question. So here the name of the question that we are doing is flag company. So if they wanted you to link your answer to the scenario, there can be two things. Either they will explicitly give the name of the question in the requirement. So they will say how Fitzgerald and Moon's building block model could be used by flag company to manage the performance. Then I know that my answer has to be case study based. Or they could say that in this case, they will not probably directly mention the name of the company. They can also say that at this company or in this case, how will Fitzgerald and Moon's model be useful? So both of these cases, you know, you have to write a case study based answer. But here you see none of those conditions are happening to be true. Neither do you see the name of the question in the requirement, nor are we noticing that there's anything written which could possibly hint that my answer has to be linked. It simply says how the building block model can be used for the performance of a service business. So not specific to flag company or the other company, that is budget company. So that tells me, now you people let me know, will it be a generic answer or will it be a case study answer? Come on, tell me, will it be a generic or case study? Yes, absolutely. This is going to be a generic answer. This is a theory-based answer which you people can directly learn also if you are looking at the knowledge-based requirements. So these are the two requirements that we are supposed to solve for. Are you all with me till the requirements? Should we now head towards the case study? You're all with me till here? Okay, so now we have a look at the case study. We are given this information. Flag company. The country of Jayland has two airlines. Flag company, that is their national airline, and budget company, which is a recent entrant into the market. So this is a new entry that they have done. Flag company was government owned until 10 years ago, but this is now operated as a private company. Do you guys see the flashback of any real life example that has happened? At least the Indian students will know this. Does the very first line remind you of any real life company in India? Kingfisher is completely shut down. I am talking about a company which was previously owned by the government, now which operates as a private company. Absolutely bang on, Avinash and Kartike. These are the airlines that you call as Air India. So this used to be a part of the government's undertaking. There's a very huge history when it comes to Air India. Initially, it was started by J.R.D. Tata, who was actually the first person to bring in industries into India. Very wise, very business oriented man, absolutely amazing at knowing how to run a business extremely, and he was also a very charitable person. Whatever money he used to earn, he used to donate a lot of that to good things in the country for the people. So keeping that aside, Air India, it used to be founded by this person first, but then it was sold to the government. So the government used to be the owner of the airlines, but now again the government could not run it properly. Consistently, losses were occurring at the company. So then they resold it back to their original owner, which is the Tata Group. So now Tata Group is privately running Air India again. So you can see very similar thing is happening for flag company also. It was originally owned by the government until 10 years ago. And now there are private people who are operating it. So private company, their main objective will be to earn profits from the company. Its mission is to be the airline of choice for long distance travelers. So they want their focus on the long distance flights. It charges premium fares and operates. So guys, here, because I am using in this PDF, I'm not sure. Yeah, I have the option of highlighting also. That's great. Okay. So the very first thing that I would like to highlight is they want to go for the long distance travelers. Another thing is they are charging premium fares and they are operating routes from the Jalan's capital city to the major airports serving the largest cities around the world. Many of its flights have a duration that are greater than 12 hours. Majority of its passengers are traveling on business and they are prepared to pay high prices. So you people know that there are usually 3 different classes when you book an airline ticket. You can go for something, the very basic ticket is called as the economy ticket. Then if you want to have some additional facilities, a better seat, then you go for the business class. And if you want the ultimate luxury, then there's the first class. So these are the 3 different cabin types that are available at major airlines around the world. The flag company is mainly catering to the business passengers who are ready to pay higher prices. However, the demand for business travel is very sensitive to economic conditions. Its fleet of aircraft is regarded as aging by the industry analysts. What do we mean when I say that the fleet of aircraft is aging? Can anyone explain this very simply? What do we mean by the fleet of aircraft is aging? Yes, aging means it is old. All of the planes that we have, they are getting old. Now the new planes are coming out with even better technology. Absolutely right, guys. Then you're told about Budget Company. Budget Company was founded by a wealthy entrepreneur who invested their personal fortune into the company's equity. The mission is to be the lowest fare airline on any route we serve. So they want to be the lowest fare. And if you see here, they are charging the premium fare. So this is the first point of difference that we can notice between 2 companies that we are trying to compare. Flag company is charging premium prices. Budget company, like the name itself is telling you, they are a budget airline. If you want to save money, just pay for the traveling. That is what you choose if you want to go for Budget Company. Any real life examples that you people can tell me? The lowest fare airlines around the world? Any real life examples you people know? Low cost airlines? Yes, EasyJet is very popular when it comes to the European countries. If you want to take a flight from any European city to another European city, that's usually the lowest fare airlines that we see, EasyJet. Indigo is the one for India, absolutely right. Wizz Air, okay, Jamila, I'm not sure I've heard of this one before. NRI says lowest fare usually is the government-owned airlines. Private airlines are very expensive. Okay, absolutely, we see this as well. Government will usually charge lower prices. Yes, Ryanair is something which is most common all around the world to be famous for the least expensive airlines. So now when you compare, guys, when you talk about flag company, when you talk about budget company, this is going to be a major point of difference. Why? Because if there are problems going on in the economy, even the business passengers, if they still have to travel, then will they be looking for luxury or will they be looking for lower fares? Consider a scenario like recession. What will people choose in the time of recession? Will they choose luxury or will they choose lower fares? lower fares will be preferred. So this is one key difference which should immediately come to your head while you're reading the question. It offers flights to destinations up to 3 hours travel from JLand. So they are restricted to 3 hours of travel only, while we are catering to greater than 12 hours. So again, another point of difference: shorter duration of travel for budget company, longer duration of travel for the flag company. Its fleet of aircraft are generally less than 2 years old. Again, another major point of difference: our flag company is having the old airplanes. This budget company has all of the new airplanes. None of their plane is older than 2 years. Most of the passengers are holiday makers, and the demand for its flights relatively appears to be insensitive to economic conditions. So definitely, because they're charging lesser money, even during the time of recession, they will not see a lot of drop in their revenue. But if you talk about luxury airlines, can you people name some of the luxury airlines in real world?
SpiceJet.
No, we're talking about luxury. Emirates come to the minds of most of the people. Emirates, Qatar, Etihad, all of these, Middle Eastern airlines are at the top of luxury. Recently, even Singapore Airlines has been counted in the luxury airlines. They've come up with very beautiful, if you go for the first class, they've come up with very beautiful private suites that you have. So yeah, these are usually classified as the luxury airlines. So again, when you look at the economic conditions changing around the world, the minute there's uncertainty, the minute there's something called as a recession or a pandemic, who do you think will face a bigger effect? Will it be the luxury ones which will have a bigger effect, or will it be the budget companies which will have a bigger effect? It will definitely be the luxury, because whenever there are any uncertainties, the first thing that people cut out on is the luxury. Yes, absolutely, Energize. Emirates has a very beautiful first class upstairs. Even the business class passengers are sent on the upper deck. They usually have a lot of the A380 aircrafts. So on A380, there are two tiers. So you can go up to the first floor of the aircraft, and it's a very beautiful view from over there. So yeah, these are the two, you can say we have identified three contrasts over here. Firstly, about the budget airline and the luxury airline. Secondly, about the distance of the travel, that flag company is longer, budget company is shorter distances. Then we've also identified another difference about the age of the assets. So flag company, old assets; budget company, new assets. And then we also know this practically also makes sense. Whatever economic conditions are changing, budget company won't see a big difference, but flag company will see a big difference. Okay. The following information is available for both companies. You can see the statement of profit or loss extract for the year end, flag company, budget company, total revenue, operating profit, finance cost, other non-operating costs, and then the profit before tax. Then you have information about the financial position also for both of the companies. And then there are some notes also given to you. The current assets include inventory of 2.1 and 1.1 million respectively. So the total of current assets are given. So a split is also told to you that within this much of assets, this is for the inventory for both of the companies. Further, we have other information also that's available. Other information includes the aviation fuel liters that have been consumed, available seat kilometers, passenger seat kilometers, and then the operating gearing of the company has also been provided. And how do we calculate the operating gearing? We basically see how much are the fixed expenses that the company is bearing. So out of the total expenses of a company, how many are fixed, how many are variable? What do you people say? What will be a good thing for a company? Out of the total costs, if my fixed costs are too high or if my fixed costs are low, what will be better for a company? Fixed cost being too high or fixed cost being low? Fixed cost being low will be better. Why do we say so? Why do we say that?
Even if in case we don't make any sales, we can recover the fixed costs.
Yes, absolutely. So during bad times when the business is not doing very well, then I can still find it easy to recover my fixed costs if they are relatively less. But if my fixed costs are too high, absolutely right, Shilpa, I will face a lot of difficulty in recovering my fixed costs. Forget about making profits, even meeting up my costs, even achieving a break even will be difficult for the company. So that's why lower the operating gearing, the better it is for the company. So this is all of the information that we are given with, and my examiner has clearly told me that they want me to use a structure wherein I have to use 3 of the subheadings. The examiner has explicitly given me those 3 subheadings. I have to talk about profitability, then I have to talk about liquidity, and then I have to talk about risk. These are the 3 categories that I have to look forward to. And you can also see my numerical marks are available for 6. So what should I do? How many numbers should I look at calculating for profitability, liquidity, and risk? How many ratios should I aim at? Firstly, when it comes to we should look at least 2 ratios, and if it is possible, if time allows, maybe I can try to go for 3, but at least 2 each so that the total comes out to 6 ratios, right? This is what my target should be. And should I try to, calculate lots of ratios? Should I try to do that? Will it be worth it? No, I should not. And what's the reason?
Because only 6 marks is available for ratio
Only 6 marks are available. So even if I calculate 100 ratios and they're all calculated correctly, examiner will still be only able to give me 6 marks. So it does not make sense to waste time and calculate unnecessarily large number of ratios. So we will only calculate what is relevant for us. Okay, guys. So firstly, when it comes to the ratios about profitability, which ratios do you guys recommend we should use?
gross profit, net profit.
Okay. ROCE, yes. I'll show you what all information we have so that you can understand better what ratios it will be possible to calculate here. We can calculate ROCE, we can calculate the operating profit margin, the net profit margin, and one ratio which is very easy to calculate using both ROCE and operating profit. Yes, absolutely right, Kartike. We will use the asset turnover also because it's simply the product of both of these ratios. So these 3 numbers we can try to work around. Similarly, the next subheading that they have asked us to use, let's get to that. Next, we want to talk about liquidity. With liquidity, we only have 2 options. Let me know very quickly which 2 ratios we can calculate. One is quick and current ratio. Absolutely. Absolutely. These are the 2 ratios that we can calculate. Thirdly, about risk. So about risk, the risk that any company faces can be of 2 types. One can be financial risk, another can be the operating risk. So we can look at the ratios related to all of these areas. Yeah, I see your responses. Gearing ratio, all right. We can also talk about the debt to equity ratio, which is the same as gearing. You can talk about your interest cover. Yes, absolutely. And we can also talk about the operating gearing. We don't even have to calculate the operating gearing. It is directly given to me in the question. So I can use this number and come to better answers, right? So this is what we are going to, these are the ratios that we are going to use. Are you all with me? The shortlisted ratios that we will calculate. So far, so good? Okay. Now, guys, before you write your answer, it's very important that we have a structure for our answer. Like I told you people yesterday also, whenever even before you start to draft your answer, it's very important to put it in a proper structure. What do you mean by a structure? We know the very basic structure is given to us by the examiner only. I have to use 3 subheadings over here in my answer. So I will go subheading wise. I will first put profitability, then put liquidity, then put the risk. And then amongst those, I will first calculate the ratios, show my calculations, and then just the calculations can fetch me a maximum of 6 marks. So what do I have to do? I have to analyze the financial performance, and I remember from the requirement, examiner told me I also have to tell why the ratio is better or worse than the other company. So we are comparing two companies, flag company and budget company. So whoever has done it better, I then have to also explain why the thing is better for or worse for the company compared to the other one. So you can remember three things that we have to do after your ratios are calculated. Firstly, I have to draw a comparison. Then I have to link it to the operational reason. Why is the reason that the numbers look like this? And then I have to do anything which is possible to link my answer to the scenario. Whatever information is extra that is given to us, we can also use that to get the extra marks in our answer. You people can see this extra information has also been provided. So it will be wise if we make a use of this information while we are drafting our answers so that we can write better answers for our case study. So this is the structure that we are going to follow. I'll note this down for you people as well. Firstly, if I talk about the broad structure, broadly, I will go subheading wise, subheadings as given by examiner. Then under those subheadings, after I have done my calculations, first I'll do my calculations. Then I will basically for my interpretation part, I'm going to do three things. What are those three things? Firstly, I'm going to draw a comparison. So I will compare. Then I'm going to find out the operational reason behind the same, business wise, why did that thing happen? And then I will try to link it to the scenario. So this is the core structure that we are going to follow. I'll show you people first for the very first subheading, that is profitability. So among profitability, we will write the names of both of the companies, flag company, budget company. And then for both of these companies, we had decided on three ratios. First, we can calculate ROCE. Then we can calculate the, what was the other one that we decided? Asset
Operating
turnover. Yes, operating profit margin. So operating margin. Right. So these are three ratios that we are aiming to calculate. I'm giving you people some time. Calculate and let me know the ratios for both of the companies. The three ratios that I have listed over here. Okay, I see a response. Umang says for flag company, for ROC, for budget company, the ROCE, operating margin as well as the asset turnover. Okay, so we can also go to our calculations. Firstly, for ROCE, I know that my formula is simply operating profit. You people don't have to write down the formula. I'm just showing it for your reference purposes. So operating profit divided by the capital employed. So flag company, we are given with the operating profit directly. It's 1239. 1239, and this will be divided by the capital employed. Now guys, there are two formulae that can be used to calculate the capital employed. Can you people quickly tell me the two formulae that we have for
Current assets minus current liability and non-current liabilities plus equity.
Yes, absolutely. Either you take the total of your assets and from that you take away your current liabilities, or you take the total of your equity as well as the non-current liabilities. Both approaches are absolutely correct. Here we can very easily use the total assets, and from that we can take away the current liabilities. So the total assets are 15376. 15376. From that, I will take away the current liabilities that are 5700. So this way I get to my calculation of the ROCE. I'll put it in a percentage format, so 12.8%. Same working I will do for budget company also. Their operating profit is 404. So equals 404 divided by what you take as your total assets, 4062. And from this you take away their current liabilities, which are given to us as 1116. So 1116, subtract this, and this way you get to their ROCE that comes out to 13.71. I can see this is matching for you people also. So that's great. Now talking about the operating margin. What's the formula that we use for the operating margins, guys? Quickly tell me the formula for the operating margins.
Operating profit divided by revenue.
Operating profit divided by your revenue. So we have all of this information also given to us. So you have the operating profit of 1239. You divide this with your total revenue of 11333, and again you convert it to a percentage, and 10.93 is what you arrive at. Similarly, for budget company, you have your operating profit of 404. You divide it with your total revenue, which is given to you as 6654. So you hit enter, convert this to a percentage, and 6.07 is what we calculate as the operating margin for the budget company. Asset turnover, we've studied the formula. It's the product of the ROCE and the operating margin. So I convert this, and again, this should not be expressed as a percentage. I will convert this into the number format. So maybe increase the decimal places a little bit. Yeah, so this way we have been 4 decimal places we have calculated. This is the asset turnover that we have been able to generate. Is there anything wrong? The numbers don't seem
By
fine.
capital employed.
Sorry?
Revenue by capital employed. We can use another for asset turnover.
Yeah, let's just use the formula itself, revenue by the capital employed. So the revenue is given to us 11333, and you divide this by the capital employed, that will be total assets 15376. From this you take away your current liabilities of 5700. So yeah. Then for the asset turnover for the budget company, again, you take their revenue that's directly given as 6654, and you divide this with their capital employed of 4062 minus the current liabilities that they have, which is 1116. So this way we have calculated the asset turnover. Also, we can make it slightly neat. We can decrease the decimal places to 2 places. So this is the asset turnover. Are you all with me till the calculations, guys? Calculations are crystal clear? Yeah, okay. Now we try to move towards the explanation for the same. So remember, what are the 3 things we have to do? We have to draw a comparison. We have to tell why that happened, and then we have to try to link it to the scenario. So what will we do for the very first thing which we have with us? If you talk about the very first ratio, ROCE, who has a better ROCE between flag and budget?
Budget company.
Budget company has a better ROCE. So guys, please keep your mic on mute. Okay, so budget company has a better ROCE, but if I just write this much, I'm not going to get good marks. So can you also identify the reason why this number is better for budget company? We can also see the asset turnover ratio. Even the asset turnover ratio is higher for budget company. Now, this is just financially, we are able to tell that this is better. Now, talking about in the business perspective, why do you think the ROC is better for budget company? What could be the possible reason why they're able to have a better ROCE? Remember the differences that we had noted about the companies. Firstly, we had noted about the pricing of both of the companies. Then we had noticed a difference. We had highlighted the points of differences. Then we had noticed about the distance. And another difference that we had found out about was the age of the assets. So remember these points and now try to correlate what could be the reason. Don't you think this will also have something to do with the distance that is covered? If your flights at budget company are shorter, what does it mean? More number of flights can be run? Yes, more number of flights, that means more amount of revenue that will be possible. So what we are going to write over here, firstly, we will draw the comparison that budget company has a better return on capital. That means they are making better returns for their investors. The main reason is because they are able to generate sales. And what is the reason for their sales? They have shorter flight times than flag company. So they can make more journeys and then they have to spend lesser time parked at the airports. You people would know that whenever a plane is also parked at a hotel, at the airport, sorry, you have to pay the parking fees at the airports. Are you people aware of that? Whatever airports the planes are standing at, they have to pay parking for the airplanes. You don't just have to pay parking for your car or your motorbikes or your scooties. You have to pay the parking fees if you're parking a plane at an airport. The government, whoever government is operating the airport, that's how they collect their revenue. So if the planes are parked at the airport, they have to pay the parking fees also. So what they are doing over here is they are running their flights for a longer duration. So the planes are for a shorter duration, they're doing more journeys. So the planes are probably better utilized. That's why they're able to generate more revenue on the assets which they are using. Also, guys, can we talk about the operating margin? For operating margin, who is doing it better? Who is doing it better at operating margins? Flag company is doing better. What could be the reason? What could be the possible reason for the same?
Because revenue is increasing, sales are increasing.
But here we are talking about the operating margins. So how is that correlated?
Higher sale and higher profit.
Yeah, if you compare between flag company and budget company is charging lesser fair prices. So that could be the reason because their revenues are lesser. That is the reason why the operating margins are higher for flag company. If you talk about the cost that they are incurring, you can also make your answer a little bit better by comparing what their costs look like as a percentage of the revenue. So that could be another way to add marks over here, but then that might be something difficult for you people to come up with the time pressured environment in the exam. So I'll show you people how you can still draft a good answer without doing any extra calculations. So just doing these three calculations that we had planned off. Now I will tell you people how we can frame a good answer. So first calculation we've done. Now we compare, then we give the reason, and then we try to link it to the scenario. So firstly, we were talking about ROCE. So how we are going to write our answer is, we will say budget company has a better return on capital employed than flag company and also a higher asset turnover. Now, this is the comparison that we have done. Then we have to come to the reason. So, what could be the reason? The main reason is the ability of budget company to generate revenue since they have shorter flight times. They are able to they are able to run more number of flights, and their planes are spending lesser time parked at the airports. This is what both of these numbers mean. This is the reason why the numbers look better for budget company. Then we are going to talk about the operating margins also. We will say that budget company earns a lesser operating margin in comparison to flag company. The reason behind the same could be the fact that budget company is charging lesser fares from its passengers, while flag company uses a premium pricing. Premium pricing. Now, guys, so far I have done the comparison. I've given the operational reasons, but did I link it to the scenario? Not quite as I possibly can. So what I will do is now I will also try to look at the additional information that was given to me beyond the numbers. So what do we see in the additional information? You can see the available seat kilometers, and you can also see the passenger seat kilometers. So how much were the capacity that you had versus how much you actually sold to your customers. So this way, what can you calculate? If you have a look at what was available and what was actually filled by the customers, what can we calculate? Try to take a hint. You're being told that 21,000, absolutely right. Bang on, Yulia. We can calculate the occupancy rate. I can find out if I had the capacity to have 21,000 people with me in the aircraft, how many people actually came. So 14,000 of them came. That tells me the seat occupancy rates. So I can link it to the scenario by also calculating seat occupancy. And for flag company, the numbers are telling me it's 14201. 14201 divided by 21,423. I can convert this to percentage. Similarly, if I do this for budget company, 14,206 was filled. Out of how much the capacity? 14,593. So you people can see this is the seat occupancy numbers. Budget company was able to sell 97% of the seats, whereas the flag company was only able to sell 66.29% of the seats. What does this tell you? Again, who won? Who has done a better job? Seat occupancy, higher the better or lower the better?
Higher the
Higher the better. So who did a better job? Budget company or flag company? Budget company did a better job. Why could you think that this could be something that budget company could achieve? Selling more number of seats? Cheaper prices, absolutely bang on. So we write over here, this is the consequence of having the low fare policy, because of which they were able to do higher sales of seats in comparison to flag company. And this also explains why you had a high asset turnover. In comparison to the assets that you were using, your revenue was high. So why was your revenue high? Because you were able to sell more number of seats. So this again clarifies whatever explanation I've given above. This is confirming that my explanation is correct. So I will say that budget company was able to sell more number, or you can say more proportion of available seats due to their cheaper pricing policy. Cheaper pricing policy. Further, we can say this also explains why the higher asset turnover is achieved in comparison to flag company. Right? This is another point that I have tried to link over here in my answer. I can also add one more point here, guys. This is about my aviation fuel liters that have been consumed. You can see that 2434 liters is consumed by flag company. Budget company has consumed this much. So what we can do over here, can we try to calculate another number? Energized seat occupancy, it's very simple. You see that out of the things that are available to you, how much you've been able to sell. So imagine you open a cinema. So there are 100 people who can sit in the cinema hall. Now, if you're able to sell 50 tickets, that tells you that 50% the cinema was occupied. So this way, how many passenger kilometers were available to us and how many were actually filled with passengers. So take 14,000 divided by 21,000. Okay, great. I see answers coming in about the fuel also. More efficient usage of the fuel. We can see that whatever kilometers were actually driven, how much was the, using the fuel that we have used, how much we have been able to fly. So we can see available seat kilometer per liter of the fuel. So who is giving you a better fuel economy? You can also understand this in the perspective of how when you run your car, there's a meter that you see over there which shows you your average. What is your average? That for spending 1 liter of fuel, how many kilometers have you traveled? Have you guys noticed that number in your car? The average of your car, have you noticed that?
Yes.
So the higher the number, the better you consider yourself. You consider, oh wow, I'm such a good driver. I have had such a good average that I have generated from my car. So for this also, airplanes also, we can calculate what their average fuel economy is. We can see that for the kilometers that they were planning, how many fuel were they planning to consume? How much fuel were they planning to consume? So their available seat kilometers, we can divide with the fuel liters that they have consumed. So I can have a look at my fuel economy. So in my fuel economy, firstly for flag company, for 21,423 kilometers, I was planning to consume 2434 liters. Similarly, for my budget company, 14,953 divided by 1246. So you can see fuel economy wise also. Firstly, you people have to tell me the interpretation. Higher the number or better, the better it is, or lower the number, the better it is. We're talking about economy. Higher the economy, the better, or lower the economy, the better?
Lower the economy.
Think again, guys.
Then why we will compare with available seat?
Because even if the seats are not filled, Ritika, the plane is going to still take the same amount of fuel, right? Think again, higher the economy, the better, lower the economy, the better. When you look at your car's average, for every liter that you're using, how many kilometers are you traveling? So do you want to travel more kilometers with 1 liter of fuel, or do you want to travel less kilometers? You want to travel more? Who has been able to travel more kilometers? Budget or flag?
Flag.
See, this is the number that we have noted down. Let me put the headings also. So flag company has been able to travel 8.8 kilometers. Budget company has been able to travel 12 kilometers. So who was able to generate better economy when it comes to fuel? Budget company was able to do it better. Budget company was able to travel more kilometers by using 1 single liter of fuel. So how can we explain this? What reason can we give for this? The better fuel economy that we have? Yes, newer fleet of aircraft. We know that all of the assets are no longer than 2 years old. So that helps you get a better economy. The older your car gets, the more fuel it drinks. We say that the car starts to drink the fuel. It drains the fuel more if it starts to get old. The engine, when it's older, it drinks more fuel, more oil. So we can give the reason for this also. We have linked it very well to the scenario now. We can say, budget company has been able to travel more kilometers per liter of fuel due to its newer fleet of aircrafts. So this is the explanation that we've given. So this is how much we should ideally be writing for the profitability perspective that we are discussing as the first subheading that the examiner wanted me to draft. Are we all good till here? Any queries, any concerns? All good till here?
Fuel economy is in dollar, not in percentage.
Fuel economy, this is how much kilometers you have driven. Kilometers using 1 liter of oil, Ritika. Okay, so now we are going to move towards our answer for the second heading, which my examiner had asked me to put. The second heading I have to talk about is liquidity. So again, the two numbers we have decided, we will calculate the current ratio, we will calculate the quick ratio. So I put my subheading. I will also bold it like I did with my profitability heading. I will write about liquidity. So in liquidity, again, I will calculate the numbers for both of my companies, flag as well as budget. I will calculate my current ratio. I will calculate my quick ratio. So current ratio and quick ratio formula are very easy. Current assets upon current liabilities. For quick ratio, current assets minus inventory divided by the current liabilities. So for flag company, if I try to calculate my current ratio, it will be my current assets of 3404 divided by the current liabilities of 5700. So equals 3404 divided by 5700. Similarly, for budget company, we can calculate this number. My current assets are 885 divided by current liabilities of 1116. So equals 885 divided by 1116. Similarly, you people calculate the quick ratio also and tell me. These are the numbers. How will we calculate the quick ratio? We know the current assets. From this, I will take away my inventory. My denominator remains the same. So for my quick ratio, I take 3404. From this, I take away my inventory of $2.1 million. So 2.1 divided by, this is all given to me in millions. So I will straight away take up 2.1 million. And from that, I will divide my current liabilities of 5,700. Same way, I will do my workings for the quick ratio of budget company also. Total current assets are 885. From this, I take away their inventory, that is 1.1, and I divide this with my current liabilities of 1116. So this is what my quick ratio numbers look like. You people can see not a lot of difference is visible because inventory anyway, because these are airline service providers, they do not have a lot of inventory which they keep. So there's not a lot of difference that we see between both of these numbers. Now, if you compare it with the ideal ratio, what's the ideal ratio we've learned for the quick ratio, guys?
1:2.
2:1, right? 2:1 is the ideal ratio. So if you look at both of the companies, for any company, are they even close to the ideal ratio? No, they are not. From what we have learned as the general thing, they are very far away from the ideal numbers. But again, what do you people say? Any reason can you identify from the case study why the liquidity is a little bit different? Although there's not a lot of difference, but for the little difference that you see, is there any reason that you people can identify? Yeah, generally we can write that this could be an industry standard. 2:1 is the ideal, but maybe in the airlines industry, this is the norm of the industry, how things work over here. We can say that. So because we cannot really identify any particular reason why there's a difference over here, so we can give a generic answer. I will say that the current ratios for both of the companies, they are below than the ideal ratio of 2:1, but now they are both service-based companies. So it's not very surprising to see that the numbers look this way, and there's also no reason that we can that is given to us in the case study with which we can tell why there's a little bit of difference between both of the companies. So we can write over here, both companies have a quick, or you can say a current ratio, which is close, or you can say both of the companies, which is far away from the ideal ratio of 2:1. It could be due to the nature of how the aviation industry operates. Further, the current ratio does not differ a lot with the quick ratio due to very little inventories being held by both companies, which is not surprising since both companies are service based. So because they are both service based companies, if it's a manufacturing company, when I sell goods, some goods, then definitely inventory is needed. But if I'm a service based company, I don't need to have a lot of inventory. And further, we can also end this by saying the reason for the difference between the ratios for both companies is not very apparent from the information provided. So this is my answer that I have drafted for the liquidity aspect. Easy? You're all with me till here? Liquidity part? Ritika, do you have a doubt?
Last line, explain what you write, ma'am.
See, last line we've just written that we can see there's a difference between the current ratio for flag company and for budget company. But in the information that the question has given me, I'm not really able to identify what could be the reason that we see a little bit of a difference in their current ratios. So I've just written this, that the difference for the ratios in both of the companies, we don't know that because the information is not sufficient to get to know the reason behind that. Okay. So now we will move forward towards the third subheading. So third subheading, we have to talk about the risk. We will first do our calculations. So I put another subheading over here in the name of risk, and I go ahead with my calculations. Flag company, budget company. The very first number that we had thought of, we are going to take the debt to equity ratio. So debt to equity, or you can say the gearing ratio. Then another ratio we can calculate is the interest cover ratio. And then one more ratio, which is directly given to me in the question, that's the operating gearing. Operating gearing. And for flag company, it's 950%. For budget company, it is 820%. Same way, we will do our workings for the other two ratios also that we are required to calculate. For my debt to equity ratio, I can see how much debt the company is having. So debt is basically the non-current liabilities. This is the amount of debt which both of the companies have. And we divide it with what? You have both of the options. Either you can only divide it with equity, or you can divide it with the total of debt and equity. I prefer to use the total formula, so I will use that. For debt to equity, I will first take the debt that is 5078, and I will divide it by the total. So 5078 plus 34 plus equity is 4598. So 5078 plus 4598. Then for budget company, the debt that we are given with is 1001. I divide this with 1001 plus the equity. So the equity portion is 1945. Hit enter. This is what it will look like in percentages. Then I will calculate my interest coverage also. Guys, what's the formula that we have learned for interest cover ratio? What's the formula?
Cost of sale. Sorry.
Yeah, it is PBIT upon interest. So we take the PBIT. PBIT is nothing but your operating profit. So we take these figures and we divide it by the interest that the company has to pay. Interest is 250. So 1239 divided by 250. And then for budget company also 404 divided by 50. So here we have calculated the interest coverage also. Now guys, before we write our final answer, let's discuss the performance a little bit before. So if you have a look at the debt to equity ratio, whose ratio looks a little bit better, flag company or budget company?
Budget company.
Budget companies ratio looks better. Why? Because they have lesser debt compared to equity. That makes you lesser financially risky. If you talk about flag company, because their ratio is higher, that is telling you that this company is more financially risky. Then if you talk about the interest coverage, who has a better interest cover ratio? Budget or flag?
Flag.
For interest cover, the higher the number, the better, or lower the number, the better? Higher the better. Why? Interest cover conceptually tells you that if a company has to pay interest, how many times does it have the capacity to pay the interest? So whatever flag company has to pay, they can pay roughly 5 times. But budget company earns enough money to pay their interest 8 times. So who is more safe? Budget company is safer. They can pay their interest much more times compared to flag company. Then if you talk about operational gearing, again, who is better, flag company or budget company? Looking from the operational gearing perspective, who is better? Again, budget company is better. Both are highly geared. This is a good observation. Umang, we can say that maybe this is how things work in the industry. Maybe the aviation business, the airline industry, this is how things work. So But again, if we draw a comparison, budget company is definitely safer. If the times are bad, budget company will still be able to will still be in a better position to recover their fixed costs. And the reason also we have learned in the case study, they follow cheaper pricing and their tickets are lesser sensitive to changes in the economic conditions. So this is how in all the three ratios that we have listed down for the risk, we have been able to identify that the competitor, that is the budget company, they are doing better. So how we can draft our explanation is, we will firstly talk about the gearing ratio. So we'll say that flag company has a higher gearing ratio. This creates risk for the company and also upon the interest that the company has to pay, no matter whether the company makes profits or the company makes losses. Then we can say that also the operating gearing is high, which tells you that if your sales go down, it will be difficult for the company to recover their fixed costs. Definitely, if flag company is seeing a time of recession, then it will make it very sensitive to the economic conditions. And there is a chance that if economic conditions go bad, then the probabilities are very high that at some point in time, they will face a fall in their sales number of units. And as a result, budget companies' gearing is lesser risky. They have a better interest cover and they will face a lesser impact of the economic conditions. So they are a safer company in comparison to flag company. So from both companies' perspective, we are going to draft our answer. So I'll say over here, flag company has a higher gearing ratio. That means a high presence of debt along with a fixed interest commitment, irrespective of whether the company makes profits or losses. Even the interest cover ratio makes it clear that flag company is not in a very safe position. In case of economic downturn, flag company may find, or you can say may face difficulties in paying their financial obligations. This is made even clear with the higher operating gearing. A slight change in economic conditions will make flag company extremely sensitive in being able to recover their fixed costs from the sales revenues. Right? And then I can say the same thing about budget company also. In the same context, I will say budget company, on the other hand, is in a relatively safer position with lesser proportion of debt and a higher interest coverage. Their investors do not have to worry. Even operational gearing wise, the impact of an economic downturn on budget company will not be as severe as it could be for flag hub. So this is the explanation that I can write for my third aspect, that is about the risk factor. Any doubts over here, guys? Are you all with me? Are you all with me, everybody?
I've got a quick question, please.
Yeah.
How do you know when on the exam to stop writing? Because sometimes you can being carried away and keep writing, and it still scores you 1 mark, but you just wrote about 1 point so much. And how do you keep yourself in line, knowing, okay, I wrote the sentence, I have to move on?
See, the best thing I would say is setting a timer the moment you start writing your answer. You know that this particular requirement that we are drafting, this requirement is worth 14 marks. Leave aside your marks for the calculation. 6 marks you've already done for your calculations. That means you now have to fetch the remainder of the 8 marks for your explanation. So 8 marks, multiply that with 1.8 minutes. So this is roughly, I would say, 15 minutes you can take for your answer drafting. So you know that for profitability, liquidity and gearing, you now have 5 minutes each. 15 if you divide by 3, you'll get 5 minutes each. So the moment 5 minutes are up, you talk about as different points as possible in those 5 minutes for profitability. The moment those 5 minutes are up, you move towards your gearing, and then the next set of 5 minutes you move towards your risk. This is the best way not to get carried away. Okay. And obviously, all of these things definitely are going to get better with practice. Yeah, do not worry, guys. I'm going to share this sheet with you after the session comes to an end. Okay, sure, Energize, you can take your time to cope. And if you have any further queries, please feel free to reach out to me. So if you're all now with me, I will take you people back towards our presentation where we will revise another concept from our syllabus that is about cost and management accounting. Then we will practice one more case study based question. That's a section B case study from a very recent past paper. So the next concept we are revising is right in front of you. This is basically if you go via the study hub referencing, this is chapter number 2. Julia says, do we need to write the conclusion? No, it's not mandatory to do that. But if you write, it will be a good thing. But if you don't write, then no marks will be lost just because you did not write a conclusion. Yeah, most welcome. So now coming towards the chapter number 2, basically that you have as part of your content from the study hub. This is about the different methods that we have for accounting the cost. So you people have learned about marginal costing, absorption costing, and activity-based costing. In marginal costing, what is the core concept, the core idea that we should remember? What does marginal costing say? Key points are already written in front of you also. Only variable costs. Absolutely right, Energize. Only the variable cost, Shruti, Anu, absolutely right. Only the variable costs are considered, and whatever fixed costs are there, they are considered as a period cost. So at the end of the year, they are expensed to the P&L account. Then guys, we have the absorption costing. Like the name itself tells you, absorption means absorbing. When you absorb something, you absorb everything. So all costs are taken care of. Both fixed as well as variable costs are considered. Whatever fixed costs are there, they are built into the per unit of the product. Absolutely right, Janani. Then we have another method that we have learned, which is about activity-based costing. What is the key word, the main idea behind activity-based costing? Yes, we find out the cost pools and then we find out the cost drivers. What are cost drivers? The reason why the cost is being incurred. So if you are spending expenses due to maintenance, so the number of times you call the maintenance person, the more expenses you have to incur. So what is causing that cost to happen? The number of times the worker is called. So this is how we decide how much of overheads will be absorbed into different products. And if you draw a comparison, guys, between absorption and ABC, which one will give you a better price, a better cost for your product? ABC will be better because it divides your expenses, it divides your fixed costs more accurately. Only the person who has consumed how much, the product which is consumed how much of expenses, they are charged to ABC. But does that mean that ABC is absolutely perfect? It does not have any limitations? Can I say so? No, ABC still comes with its limitations. Sometimes it will not be very easy for you to collect so much of detailed information. Sometimes finding out a cost driver for all different costs that are being incurred at the organization will be a very difficult thing. It will be time consuming. It will be expensive. Sometimes you have to assume the cost drivers because you cannot find the direct cost driver for it. So different problems are there with ABC method also. Absolutely. Cost, time, effort, everything is very high when it comes to ABC. Which business will benefit the most with ABC method? I think somebody had put it in the chat box also earlier. Which business will benefit the most with ABC? The one where the proportion of overheads is very high and they do a lot of complex work. So different activities are there in a process with which those overheads are incurred. Yes, it's a complex manufacturing business with high overheads. Those are the businesses where maximum benefit of ABC will be visible. Absolutely right, guys. So these were quickly the concepts that we have revised. Now, before we move ahead with our question practice, just reiterating the tips that I told you for the section B. Firstly, we will read the scenario carefully. The first step will be to see what all information is given, highlighting anything which might come handy later. Rounding of instructions have to be taken care of very properly. Whatever instructions are given, ensure that you are adhering to the same instructions, because if you don't, computer is going to mark your answer incorrect even if it is absolutely right. So please double check upon the rounding of instructions. Lastly, time management. This can make or break your paper. So we know that here every question is going to carry 10 marks each. So 10 marks multiplied with 1.8 will give you 18 minutes that are available for you to solve a section B case study. So even guys, in any practice that you do from today onwards, tomorrow onwards, whatever practice you do till the time of your exam, ensure that you are setting a timer for yourself, creating that time pressure in your head in the practice stage only, so that at the day of your exam, you do not feel that pressure. You will become used to of solving these questions within the stipulated time limit. Right? Are we now ready to move towards the question? Yes? Ready to move towards the question? Okay. So this is a past paper case study that I have copy pasted for you over here. You can see the information. We'll first read the case study, then we have to answer 5 questions basis this case study. So we are told Rase company manufactures 3 types of guitars in one of its divisions. First, you have the jazz, then you have the rock, and then you have the classic. Rase company currently operates a costing system which uses a single overhead rate based on the revenue to charge overhead costs to the guitars. The finance director has suggested a change to an activity-based costing system. Can you people identify which method are they using right now?
ABC.
They are using the traditional absorption costing method. Absolutely. This is what they are doing right now. And now they are thinking to move towards the ABC system. The following information has been collected about the manufacture of the components. You can see selling price, prime cost. Prime cost is basically the variable cost of the product, the material and the labor. Number of components which have been produced and sold, production batch size has been given to you in terms of units, machine setups, processing time per unit, quality inspection per batch. So multiple pieces of information, because with the first line itself, you would be able to understand this is going to test you on the ABC method. So for solving using ABC method, we need a lot of information information. So that is what we see over here. Further details on the overheads incurred have also been ascertained. Quality inspection is caused due to the number of inspections. The more inspections we have, more cost is getting incurred. Machine setup is because of the number of machine setups. The more times I set up the machine, more cost I have to incur. Component processing is because of processing time in terms of number of hours. So the more processing time I spend, more money gets spent because of processing. So these are the cost drivers which have also been identified along with the division of the costs that have been incurred. So far, this is the case study. This is all the information that we are going to use to solve 5 questions that are based on this case study. So you people can see the very first question that is being asked from you. What is the profit per unit of a jazz guitar using the current basis for charging the overhead cost? So what is my current basis? My current basis is using absorption costing, wherein I use the overhead absorption rate. So the information is already given to you. You people have to identify, you have to find out profit per unit of a jazz guitar. So this is what you have to do. I am showing you people the available information. So as for the current system, you can see how are they charging the overheads currently. Single overhead rate is calculated based on the revenue. So do that. Try and solve it on your own first. Take 2 minutes and then we are going to discuss this together. Put your answers in the chat box the moment you people are done solving. We have to calculate it for, I think, the jazz guitar. Yeah, jazz guitar, you have to calculate the profit per unit. Okay, great. I'm starting to see your responses. Just 30 more seconds, then we discuss this together. Okay, so I have to find out my profit per unit. So for profit, what do I have to do? From my selling price, I have to subtract all the cost. I already know my prime cost, but I need to know about my overheads also to come to the profit. So what I will do is I need to find out how much of overheads need to be charged. So firstly, I need to find out for my overhead absorption, what is the rate that I will be using? So that rate is calculated on the basis of revenue. So I need to know how much is the total of my overhead expenditure. So 40,810, I will add the expenses together, 40,810 plus 120,540 and then plus 643,100. So this gives me 804450. 804450. Now this I have to find out in terms of it's divided on the basis of revenue. So I need to find out my total revenue. So total revenue, how can I get to know about that? Simply whatever I'm charging per unit multiplied with the number of units that I am selling. How many number of units I am selling? This is the number of units and this is the selling price per unit. So 620 into 5,000, 620 into 5,000 plus 700 into 6,000 and then add to this 3,000 into 450. Right? So I do the same working on my calculator also now. 620 into 5,000. Then I have to take 700 into 6,000. And then I will take 3,000 into 450. So this gives me a total revenue of 8650,000. So I write this number over here, 8650,000. Now what do I need to do is I need to find out how much overheads I will charge for the revenue that I have. So my overhead absorption rate will be equal to whatever is the overheads that I am incurring, that is 804,450 divided by the total revenue. So what's the total revenue? 8650,000. Now calculate and let me know how much is the OAR going to be. How much will the OAR be? Okay, 0.093 is what you people are telling me. So I trust you people, 0.093. Now I need to know for the jazz how much the profit is going to be. So let me see how much revenue I am getting per unit of jazz. So for per unit of jazz, I'm getting 620. That means for $620, I'm going to charge how many overheads? 620 times 0.093. So if I do this calculation, 620 times 0.093, that gives me 57.66. This is equal to 57.66. Now, how can I get to my final answer of the profit is I will take up my selling price, I will subtract the prime cost, and then I will remove the overhead cost also. So 620 minus 370. 620 minus 370 minus 57.66. So when you do this on your calculator, 620 minus 370 minus 57.66 gives you exactly 192.34, which is option A that I will pick as my final answer. Right? Are you all with me on the first question? First question clear? Understood everybody? Very easy? Okay. Now we move forward to the second question. Question number 2, you have to use activity-based costing and you have to tell what is the machine setup cost for a rock guitar. A rock guitar means, do I have to give my answer in total terms or do I have to give my answer in per unit terms? Let me know very quickly. My answer has to be in per unit terms. Guys, please ensure that you're paying very good attention to the requirement that's been asked from you. If you miss on this part, you are going to enter probably the full cost over here, even though the full cost will be correct, but the question is asking you in per unit terms. So please keep all of your doors of your mind completely open while you are reading the requirements. So I have to find out the machine setup cost for 1 unit of a rock guitar. So this is the information that is available. I have to use ABC costing. I have to look at the machine setup cost. So you people can see machine setup cost is driven by number of machine setups. So this is the number of times we have to set up per batch and this is the number of components and it's telling you how many products are produced in one batch. So first you will need to know how many batches are prepared and then you will have to multiply the setups per batch. That will tell you the total setups for different products. Then you will take up this total machine setup cost and divide that by the total number of machine setups. So again, take 2 minutes, solve and let me know. Let's also discuss this together. Again, this requirement is also very easy. Let me see if I can insert some space over here. Yeah. So I will just remove this. Okay. So I basically need to find out how many will be the number of setups that need to be done. So firstly, I need to find out how many batches are there because the machine setups are given in per batch terms. So to find out number of batches, can anyone tell me what will I have to do to find out the number of batches that will be needed?
And first, we will 5,000 divided by 100 into 3.
Yes, absolutely. So firstly, if I want to find out only the number of batches, then I will do this working. What is the working? I will take the total number of units which I am making and I will divide that with the batch size. So you people see that jazz is produced in batches of 100 and in total I want to produce 5,000. So how many times will I have to run the batch? It will be 5,000 divided by 100. Similarly for rock it will be 6,000 divided by 150 and then for classic it will be 3,000 divided by 200. This is what the numbers are going to look like. And then further, if you do the workings for this one, it will come out to 50 batches that you will need for jazz. Then for rock, you have to do 6,000 divided by 150, which will give you 40 batches equals 40. And then here you will have to run 3,000 divided by 200, which will give you 15 batches in total that you will need for the classic one. So 15. Now you know that every time you are going for one batch, you require 3 setups for the first category. So 50 into 3, then 40 into 5, and then 15 into 4. So you can now find out how many number of batches will be there. So 50 into 3 will give you 150, 40 into 5, this is going to give you 200. And then if you take 15 times 4, it is going to give you 60. So how many total number of setups are happening, guys?
110.
Yes, you're going to add all of them together. 200 plus 150 will give you 350. 350 plus another 60 will give you 410. So this setup cost that you have incurred of 125.40, you have spent it for doing the setups 410 times. That means how much did it cost you per setup?
294.
You will divide the total cost of 120,540 by 410. So your workings will be 120,540 divided by 410. And if you run this on your calculator, 120,540 divided by 410, that will give you 294. So this is the per setup cost. Now you have to tell that what is the machine setup cost for one rock guitar. So you know that in one setup, how many number of units will it be possible to produce?
9.8.
Your final answer will come out to 9.8. But what is the steps that we have to follow to get to that answer?
We will multiply with the per unit and divide by units per unit.
Yes, yes. So what we are going to do is, I know that 294 is for per setup, right? How many setups do I need to do in total for this category? For the rock guitar, we have calculated that I need to do the setup 200 times. So the total cost for all units of this particular category of guitar will be 294 into 200. So total cost will be 294. If you multiply this with 200, it gives you 58,800. 58,800. This is for how many guitars? How many guitars are we making? 6,000. So if I want to find out per unit, I will simply divide this by 6,000. So 58,800 divided by 6,000 number of guitars. And then when you do this on your calculation or on your calculator, this will give you 9.8. This is a complete 9.8. But if you have a look at your rounding of instructions, how many decimal places you have to give your answer to? How many decimal places? 2 decimal places. So what will I type out? If I write out 9.8 over here, will it be correct? No, it will be wrong. I have to give my answer as 9.80 to ensure that I am addressing the format of the question. 2 decimal places. So I've given my answer to 2 decimal places. This is how we will solve for the second thing. Yulia says, I'm sure I did a mistake like this. This is absolutely possible and you will end up losing marks. So ensure that wherever the rounding off instructions are given to you people, you are following the instructions. As it is, scoring marks in the paper is a difficult job. Do not lose out on these marks by doing these silly mistakes in your paper. Are you all with me on the second question? Yes, do you all follow till here? The level of responses is going down. Come on, guys. I also need some motivation. Yeah, okay. Now you move forward to the third question. Using activity-based costing, what is the cost of component processing for a classic guitar? So here you have to give your answer in the context of component processing for a classic guitar. Classic guitar, and again your answer is up to 2 decimal places. Here you have to pick from the options. So component processing, classic guitar, here we go again. I will just try to make some space for our workings. Component processing is on the basis of processing time in the number of hours. So per hour, we have to find out the cost and then ultimately we can come to our final answer. So here we will need to know how many hours of processing will be required in total. So take 2 minutes, solve, and then let me know your answers. Then we will discuss this together. Okay, great. I can already see your responses coming in. We have to talk about the processing time in terms of the hours. So it's given to you that per unit of all of the different guitars that you're making, it's taking you this much of time of processing. So per unit, if it is taking you 4 hours, that means for total jazz units. So jazz, rock, and classic. So if per unit is taking 4, so for the entire 5,000 units, you're taking 4 into 5,000. For rock, it will be 5 into 6,000. For classic, it will be 3 into 3,000. So if you total all of them out together, 4 times 5,000 is going to give you 20,000, 30,000, and then 3 threes are 9,000. So when you add them all together, it's a total of 59,000 hours that you have worked, and the total time that you have spent is this much. So that means per hour, what is the cost? 643,100 divided by 59,000 hours in total. So when you run these numbers on your calculator, you're going to find out the per hour time. So 643 100 divided by 59,000 gives me 10.9 per hour. And then I have to give my answer again in one classic guitar terms. So one classic guitar, how much time does it take? One classic guitar takes 3 hours of processing time. So if for 1 hour it's 10.9, so for 3 hours it will be 10.9 into 3. When you do this working, multiply 10.9 with 3, so 32.7 should be your final answer. So this is the very first option. I'm going to select option A. So far so good. Are you all with me? Question number 3 also. Okay, great. So now moving forward to the fourth question. No numbers are involved. I have to think and then come up with my answer conceptually. Which of the following statements concerning the advantages of ABC as opposed to a traditional costing system is correct? So I have to read all of the statements and tell one statement which is correct, and that statement will be an advantage of ABC, which is not what we get using the traditional system, right? This is the requirement. First option tells you all overhead costs will be accurately linked with a measurable cost driver, which will facilitate the control over the overhead costs. Then you have statement B, costing will be more accurate when overheads are a small proportion of total costs. What do you people think about statement B? Statement A we can come back to, but can statement B be the answer? Statement B has to be right because we were just discussing for which businesses will ABC be more accurate? For which business will ABC be more accurate? High proportion of overheads. Absolutely. So this way I can very easily eliminate option B is not going to be my answer. If you look at option C, short-term decision making will be more meaningful because all fixed production overheads are included in the calculations. What do you people think? Can this be the advantage of ABC over traditional absorption system? It says only in ABC we will be absorbing the overheads, but in absorption costing we don't take care of overheads. Is that true? No, in both the methods, we are including the overhead costs in our calculations. Just the way that we are dividing the cost, that is different. So this is also not the answer. If you look at option D, it says costing will be more accurate as it recognizes that activities are consumed at different rates by different products. Now you people have to make a choice between option A and D. Think very carefully and let me know which one do you think should be our final answer. Okay, great. I see responses from you people and you all are saying option D, which is absolutely the right answer. We have studied this, that ABC will give you more accurate costing because you are recognizing, you are acknowledging that some activities will take more cost, some activities will take less cost. But can anyone now tell me what is the reason why we are rejecting option A? Why is option A not the answer? You can answer this question only if you've studied the things very, in proper, concise detail. You've studied, you went into the thick and skin of it to find out what exactly is the concept. What is the key word which is making this entire statement wrong?
Does not control on all overhead.
No, overheads we can control, but it is saying that all overhead costs will be linked accurately. If you remember, when we were studying the limitations of ABC, we were talking, sometimes it will not be possible for you to find out what is the cost driver. Absolutely right, Enerize. That is when we have to assume. So all overheads cannot be accurately linked. That is the reason why we are not selecting option A as the answer. Option D will be my final answer over here. All with me on this? Easy? Yes, should we head to the next one? Okay, moving ahead to the fifth and the last question for today. The finance director is pleased with the results of the ABC analysis of the guitars and is keen to extend the use of ABC to the other divisions also in the company. One such division, which manufactures electronic keyboards, has begun to introduce ABC and has identified some relevant activities and cost drivers. What you have to do is you have to match the most appropriate cost driver to the activities that have been identified. So different costs are given to you. You have to link which activity they will relate to. Now, guys, if you have a look at this question, it looks very easy. But if you see over here, you all know that your marks over here will either be a 2 or it will be a 0. So here the examiner is so cunning, the examiner is so clever that they are asking you 5 questions in one. You can see 5 things have to be marked correctly, absolutely correctly to each other. Only then you will be getting those 2 marks. So you have to answer all 5 of them accurately to get the marks. One single one marked wrong and you lose all of your marks. So be very careful while you're framing your answer for this. Have a look and tell me what can we possibly match to what option. Take 2 minutes, go through this and tell me. Some of the things, they are directly correlated to each other. If you talk about your number of material movements, what can we link it to? It can lead to material handling costs. So the more times the material is moving, more material handling costs will be incurred. So if I'm labeling them as 1, 2, 3, 4, and 5, I will label this as number 2. This is what is going to match over here. Then if you talk about your purchase orders, which department does the purchasing of the things at the company? It is the procurement department. So number of purchase orders can be linked to procurement. I can write 3 over here. Anything else that you can see directly correlating? Number of machiners. Machine will be going in customer service, IT support, or maintenance. It will go into maintenance. Absolutely. So this is the 4th point. Now I'm left with 2 things. One is my number of service requests, and then it is the number of warranties. So who will handle the warranty? The customer service department will handle the warranties. So I will label this as number 1. And if I talk about the IT support, that's the last one that is left. They are going to, customer service will be warranties. I'll write 2 over here, and for the warranties it will be number 5. And then if I talk about my IT support department will provide me help whenever anything wrong goes technologically at my company. So the more service requests I place, more money I will have to spend on my IT support services. So this is how, guys, we are going to match for the 5 different options that are there. Very clever of the examiner to ask you so much to get those 2 marks. Yes, but I would say this is rather easy. You found this question easy?
Yeah.
Okay. So guys, this was a section B case study that we have practiced together. Now we have covered a few of section C, a few of section B questions also. I would also like to, before I let you people go for today, I would like to also give you some of the tips for the section A of the paper. So for the section A of the paper, since you people, I think I saw somebody asking in the chat box, how can we improve on the objective type questions? So my suggestion, guys, is please focus on covering the entire syllabus, because you know that section A, section B of your paper, it can test any area of the syllabus. Even for that matter, I will say section C also can test anything and everything. So please ensure that you're taking care that no selective study is being done. You're covering the entire syllabus. No topic you're leaving unfinished or uncovered, unrevised before your exam. Everything and anything is important in the PM paper. Secondly, guys, time management. Again, I have emphasized this a lot over the 2 days. You people have to take care of time management really very well. 1.8 minute per mark is the rule. Make it a habit from today itself in your question practice. No matter what questions you're practicing, always set a timer as per the marks that are available. This is going to help you ultimately face the time pressure better in your final exam. Thirdly, remember your rounding of instructions. Always double check, because if you are getting your answer wrong only because of this silly mistake, it's not even, I would not even say that you're unlucky. You are not smart enough to capture those easy marks. So please ensure you are double checking on the rounding of instructions. Read the question very, very carefully. Just now I have illustrated to you people, you could, if you just fail to read that small letter, a rock guitar, you could probably have given your answer in total terms, which will be absolutely incorrect. So please ensure you're reading the requirements carefully. Double read, triple read the requirement, but understand the question carefully. Lastly, guys, for the multi-select questions, the one that we were dealing with just now, when there are 2 options that you have to select, 3 options you have to select, or multiple things that you have to match together, be very careful, because if you're matching even one single thing incorrect, if 3 of my options were correct, 2 were wrong, I will still be losing out on my marks. Even for the multi-select answers, where the multiple choice question is there and you have to select 2 options, you have to select 3 options, ensure that you're selecting 3 when they ask you to select 3. When they ask you to select 2, ensure you're selecting 2, so that you are not losing out on those marks. Usually in a hurry, you might move forward by only selecting one answer. So even if your one answer that you've selected is right, you will still end up getting 0 if you've not selected all the correct options that they were asking you to select. So please be very careful for the multi-selection questions. So guys, these were some of my tips for the section A as well as section B of your paper. Now, if you have any queries, you can drop them out in the chat box. I'm opening the floor for any questions and answers, and then we are going to call it a day. I will share all of the resources that I've used as part of this webinar over the WhatsApp group. So you can refer to the resources from there. Any queries that you people have, please let me know. Okay, guys. So tomorrow we will meet for the day 3 of the webinar, wherein we are going to have the grand revision, entire PM syllabus in one shot. This will only be for the Being ACCA PM revision course and the success path students. If you still want to be a part of the day 3, you can let me know and I'll let you know the process, what you can follow to be a part of the same. And even if you do not want to turn up for that, I wish all of the students who are attending this session today a very all the best for your final exam in the month of June. And I hope that you people get to see some really positive results in the month of July. All the very best, guys. Thank you so much for being a part of these webinars. Bye-bye. Take care.